Hi everyone, welcome back to Grade B. So in these particular regulations, we'll be talking about the qualified suppliers who can supply the bullion on the India International Bullion Exchange, that is IIBX, right? So let's see. Any entity which is being a body corporate, company, limited liability partnership, right? They have been incorporated in India or in any country of their jurisdiction, any country, foreign country as well, they can apply if they want to become a qualified supplier on IIBX, right? Then they how you can trade on to this. So qualified supplier, they shall be permitted to transact. They can seek the application in following. They can also operate as a client of bullion trading member or as a qualified supplier limited purpose trading member. We'll be talking about them in a bit. Qualified supplier client, they shall participate on IIBX through a bullion trading member. That means this is a mediator. You can talk about a broker mediator, and they may undertake the sell as well as the buy transactions, right? Now, onboarding of a client shall be as per the process which has been told by the IIBX and the IIDL. IIDL is a subsidiary of the IIBX. We have already talked about it when we were reading the IIBX. QS client, they may approach a bullion trading member for opening a client account for the purpose of supplying bullion. They can do the supply as they can do the trading also when you are seeking the registration as a client. Qualified supplier can seek the registration as a client or as well as a LPTM, limited purpose trading member. Now let's see what as a limited purpose trading member, if they are seeking the registration as a limited purpose trading member, then they shall be permitted to participate directly on IIBX for the limited purpose of only sell transaction. So now you have got the difference. When you are taking the registration as a client, you can do buy also, you can do sell also, fine. But when you are taking as a limited purpose trading member, then you can only do sell. Now, additional eligibility conditions for becoming a qualified supplier on IIBX. An applicant entity which is wishing to participate as a limited purpose trading member, they shall have to satisfy the following conditions. What are the following conditions? First of all, you must be engaged in supplying these kind of precious metals for at least 5 years. They should have minimum net worth requirements equivalent to the US dollar 10 million. Fine. Net worth for the purpose means we already understand the paid up share capital, etc. etc. The entity, they shall also provide the net worth duty certified by the chartered accountant. So if you are showing any net worth, then that should be certified by a chartered accountant, a certified public accountant, or cost management accountant, that is a CMA, or a company secretary, as the case may be. You have to maintain such net worth at all times. The entity shall be a member of at least one of the below mentioned associations. What are the below mentioned associations? For a continuous period of 5 years. LBMA, London Bullion Market Association. This is an association of the suppliers. We have talked about it, right? Remember in the IIBX wala video. CME Group, Shanghai Gold Exchange International. These are all suppliers group. Dubai Multi Commodity Center, Borsa Istanbul, or any other association or exchange as may be as specified by the authority time to time. Now, what is the process of onboarding? So this process is not very important, not at all important. You have to file a common application form. You have the IIDL, that means the depository. They will carry out the due diligence, and after that they will see that all the know your customer requirements, anti-money laundering, as well as the counter finance on terrorism, etc. These guidelines have been complied with or not. Now, what is going to be the mode of participation by the qualified supplier on IIBX? How you can engage? So qualified supplier participating as a limited purpose trading member, they shall be enabled by the IIBX to directly access the trading system. Okay, and they also have to associate themselves with a clearing member. Obviously, you can just do the trading. So you have to engage with someone who could do the clearing for your transactions. Now, movement of bullion by the limited purpose trading member to and from IFSCA registered vault manager. See, you are a supplier, right? You are a supplier, but these bullions, they are maintained in a vault is like a, what you can say, a safe place where the bullions are maintained. So a limited purpose trading member, they bring their bullion into any of the depository empaneled vault operated by the IFSCA, right? And they can keep it safe over there. IFSCA registered vault manager, they shall ensure that physically separate vault space should be made. Fine. And the BDRs will be created, because see, trading can happen in the IIBX only in the depository format, right? If SCA registered vault manager, they shall provide the following details: name of the beneficial owner, details of the empaneled vault, details of the refiner, jiska whose what you can say markings are engraved on the physical bars, what is the purity of bar, what is the weight of physical bar. So these are the informations that the vault manager will maintain. See, you are a trading member. Great. You will trade in the BDRs. Now, from where you will get these BDRs? You have to provide the bullion to the vault, right? And then once these bullions have been received by the vault, then depository will issue you BDR. Once you get these BDRs, after that, after this only you will be start trading, right? Now IIDL, they shall issue the BDRs in electronic format with the underlying bullion. IIDIL is the depository which is connected with the IIBX. We have already talked about it, its chairman, etc. in the IIBX wala chapter. You can visit that particular chapter, right? And then after that, only net worth was a criteria that was important. Apart from that, in how many types you can take a registration, you can be a qualified supplier and in a client format, and you can also be a limited purpose trading member. Now there are some miscellaneous definitions. Who's a qualified jeweler? So qualified jeweler, they must have filed the GST returns in the preceding month prior to making the application. Certificate should be submitted duly attested by the CA practicing CMA or practicing CS, stating that 90% of the annual turnover in the last 3 financial years should be by dealing in goods under the precious metals. That means they are saying that whatever business you are doing, 90% of the amount you have earned from there. Entity shall have a minimum net worth of the 25 crores as per its the latest audited financial statement. Next is the qualified jeweler. They may transact in following manner. They may transact in as a client, as a trading member, right? As well as a limited purpose trading member. Client means you have to register with a trading member. When you are yourself becoming a trading member, then you have to take the approvals, and there are a lot of approvals, right? So either you can become a client, you can become yourself can become trading member, but mostly it doesn't happen. The person either becomes the client or the limited purpose trading member. So this was your qualified supplier related regulations. So as per me, in this particular regulation, nothing else is important apart from the fact that I was mentioned. Just wait for a second. Where was it? Yeah. So these are the twin things that are important into this particular chapter. Apart from this, nothing else is more important. Now, once we are done with that, now let's shift and talk about that what has been the changes in our Finance Act related to the bullions. Okay. So these are the few important things that I felt that you needed to know related to the IFSCA and Finance Act 2023. There are few clarifications, few details, etc. that we'll be covering with with the quite in a quick manner. So let's see clarity with respect to the non-applicability of angel tax to alternative investment funds that has been set up in the IFSC. So see what happens is whenever as a fund you are receiving the funding, government say, see, you have a business idea. So an investor gives you, if you are having today worth of 100 rupees, investor will give you 500 rupees. Why? Because he is not valuing you in present. He is seeing your potential and he is giving you 100 rupees for your today's worth, and plus he is giving you 400 rupees more for your future worth, right? So government has imposed a tax on it. that this is the angel tax and you are receiving the funding and you are receiving more than what you value for, and we'll be imposing tax for that. So this total matter is regarding that. Now the finance bill extended the applicability of infamous angel tax to non-residents. Fine. So angel tax provisions consider difference between the consideration received by investee company by way of issuance of share and the fair market value of such shares as income from other sources in the hands of such company. Now, the amendment bill of the Finance Acts Amendment Bill, it gave us a clarification. It said that angel tax will not be applicable where consideration for issuance of shares is received by an unlisted Indian company from an AIF set up in IFSC. That means they have specified, you have to remember only this piece of information. If there is an alternative investment fund that has been set up in IFSC, right? And this fund has invested in an Indian company which is unlisted. Unlisted means still growing, right? So angel tax will not be applicable over here. Next is incentives for aircraft leasing. So obviously you want to give this business a boost. You want that this business shall set up its place in the IFSCA, in the IFSC. Sorry, IFSCA is the authority. So Finance Act 2021, it gave the certain incentives to promote aircraft leasing in the IFSC. Such incentives were extension of tax holiday, right? Exemption of royalty income which is earned by non-resident on account of aircraft leasing. But in order to further incentivize the aircraft leasing, now our finance amendment bill, it has introduced that any income of non-resident or a unit in IFSC which is engaged primarily in the business of aircraft leasing by way of capital gains arising from transfer of equity shares of domestic company. The operations of domestic company have commenced on or before 1st April 2026, means before this particular date, and such capital gains have arisen within a period of 10 years from the date this company has started the operations in the IFSC or assessment year 2034 or 35, whichever is later, right? So within these two particular periods, that means first of all, you should have started your operations before 1st April 2026, and these capital gains should have arisen to you within 10 years from the date in which domestic company has been formulated. Suppose now one company has formulated in the 1st April 2025. Great. So it is has been formulated before 2026. Now the 10 years will complete on the 31st March 20 yes, 2034. 10 years will complete over here. So this is what they are saying. It should be within 10 years from this particular date. It should have commenced the operation, and such capital gain matter should be a matter of in that particular period. Suppose this company has started 1st April 2025. Now between this period, such capital gain should have occurred, right? Not later than this particular assessment year. That means the financial year of 20, 33, 34, not later than that. So if such capital gain occurs on the transfer of equity shares for a company which is involved in the aircraft leasing, it will be exempt. Now dividend income of the units of IFSC which are engaged in the business of aircraft leasing, you are doing the business of aircraft leasing, you are distributing the dividend income, right? So it will also be exempt from tax, will not collect any tax. Now obviously this is going to give a boost for the business of aircraft leasing. Increase of tax holiday for offshore banking units. So Income Tax Act, ITA means Income Tax Act, it provides that offshore banking units which are having income in IFSC, they can avail 100% deduction from income for 5 consecutive assessment years, and after that for the next 5 years, right? Suppose you started in 2020, so the first 5 years you will have a 100% deduction for the income, and for the after that 5 years when will come 50% of the deduction. Now the amendment bill has increased the 50% limits to 100% for the assessment year commencing from April 1, 2023. So if you are an offshore banking unit which you have started, so for first 5 years you will get 100%, and after that also you will get the 100%. But this is limited just for the 10 years. Now, reduce tax on distribution of dividend. So amendment bill says, see, for a business of aircraft leasing, we have exempted it. But for the other businesses, so dividend which is received by the non-resident or a foreign company from IFSC unit, they will be taxable at 10% instead of the 20% which is applicable for an Indian company, right? So here, if any non-resident, any person who's living outside India, if they receive any kind of dividend from the IFSC unit, it will be taxed at a lesser rate, 10%. Next is the reduced tax on borrowings. So interest income which is received by a non-resident, right? For which entity? Which is listed on IFSC stock exchange. These are taxed at a lower rate of 4%. However, concessional tax rate of 4%, it has a sunset clause. That means it applies only for the bonds which are issued prior to July 1st, 2023. Now, the bonds which are going to be issued post July 1, 2023 and listed on IFSC exchange, they would have been taxed at 20%, right? Obviously, this provision would have expired. So, in order to provide the tax competitiveness, Amendment Bill says that interest income, which will be earned by non-resident because they have given the money, right, in a rupee denominated bond or etc. on or after July 1st, 2023, which is listed in IFSC, it will be taxed at 9%. So they are saying that, oh, this was going to expire. We were earlier taxing for 4% interest income, but now from July 1st, 2023, if government would or not have brought this provision, then this would have taxed at 20%. Any interest income that was earned by non-resident. But now government has said that we cannot make it 4%, but yes, we will provide you the benefit and we'll tax it at 9% instead of the 20%. This is the default. Now, instead of going for the default, government is saying you have to remember just this, that any interest income earned by the non-resident by an unit which is listed in IFSC, it is going to be taxed at 9%. Next is the tax collection at source. So on remittance to IFSC under the liberalized remittance scheme, Finance Bill has increased the rate of TCS on remittances outside India under the LRS from 5% to 20%. Now the amendment bill has modified the relevant section and thereby implied that the remittances even to IFSC will also be subjected to the increased TCS of 20%. If someone is sending the buying and selling, etc., right, doing between India and IFSC, then there will be TCS applicable. So earlier it was just out of India, but in the amendment bill it was clarified that in this out of India we will consider IFSC as also out of India, right? So if there is any transaction of sale and purchase happening, any kind of remittance happening on which TCS is applicable, right, on which TCS is applicable, then such TCS will be charged at the rate of 20%. Now next is this, some offshore derivatives instruments. So any income in the hands of non-residents because they have transferred this offshore derivative instrument, right, which was entered within IFSC banking unit. This means one party was non-resident and the other party was the IFSC banking unit. Both of them, they have entered in a derivative contract, and now this person has transferred this particular contract and he has earned a income. So the IBU makes an investment in permissible security. So any income if the RBU receives is taxed as a capital gain. After such tax is paid, remaining income is distributed. The budget proposes that it is going to provide the exemption to any income distributed on which IBU has already paid the tax to a non-resident investors. This just not very important, but I'll just clarify this. So what they are saying is, see, they want to avoid the double taxation. What they want to avoid with this particular move, they want to avoid double taxation. So they are saying when one party of the contract has already paid tax, then you should not charge the other party as well. Okay, there is a transaction, and if one party has already paid tax for it, then you cannot go and seek other party also that please give a tax onto it. So budget says that exemption if a non-resident investor receives income, and on such income IBU has already paid tax, income of offshore derivative instrument. So whatever I'm telling, you have to just remember that in any income of offshore derivative instrument onto which IBU, that is a banking unit, has already paid tax, then such income will be exempt from for the non-resident investor, because one party has already paid tax onto it. So these were the important provisions in your Finance Act of 2023. We have covered two vital topics in this particular lecture. Short and sweet lecture. I hope that you were able to understand them. Thank you so much for joining in.